Good afternoon. Welcome to MADARA Cosmetics Investor Webinar. We will begin with a presentation from the company, followed by a live Q&A session. Throughout the call, we will be looking forward to receiving your questions. You can either submit them in writing through the Q&A window or raise your hand and be unmuted after the presentation is over. For your convenience, the webinar is being recorded and replay will be available shortly after the session. Now, I'm introducing today's hosts, Gunta Schulte, member of the Management Board and the CEO, and Tatjana Nagle, member of the Management Board and the CFO. The floor is yours.
Thank you very much, and good day, everybody. As always, a pleasure to host the webinar for our investors. And today we are going to cover first half of 2025 results, and then also what's to be expected in the upcoming period of 2025. So as usual, we have also some legal disclaimers. For the sake of time, I will skip those through, but just for the rules, then we keep them in the presentation. So for today, presenting will be myself, Gunta Schulte, and Tatjana Nagle. And what we will cover. So we will talk about main events which have shaped 2025 and then also beyond 2025. First half, we will go into more details about key numbers and even in more details what contributed to those numbers and what does it mean for a company and our results, expected results. And then also covering in a bit more detail than maybe usual than what's anticipation ahead of second half of the year in terms of key activities, both related to growth and then also efficiency. As usual, full management reports can be found under our investors section on madaracosmetics.com or under NASDAQ Madara Cosmetics section. So we'll proceed. So 2025 first half, in one phrase, it can be characterized as really active, high-speed phase of multiple test projects to test where are the verticals for future growth. And I think this has been already some works pre-planned in 2024. Some of those projects were the outcome of 2024 strategic sections, and some formed early beginning of this year. But definitely it has been very, very active in terms of testing and making sure that we have future growth verticals. Here on this slide, maybe I'm more sharing those really a couple of which we are very, very proud of. Of course, we will cover then fuller scope because as you know, in real life, pilot projects or test projects usually mean some are successful, some are less. Nevertheless, then covering the key of those. So first of all, what gave us really confidence of future growth is that already last year we started scaling Amazon channel, and this year it proved really to materialize in substantial growth. So we doubled Amazon in the first half compared to the year ago, and it's already becoming a substantial channel for MADARA. And the other channel that we started fresh new scaling, that was already, we started in Q1 this year. And this is TikTok. And this is completely new territory for MADARA. TikTok, to be specific, in UK, because TikTok in each market is a different channel, per se, I may say that, because setup is country specific. So we launched our first TikTok shop in Q1, which we already reported with the Q1 results, and I'm very happy to share that also this completely new channel for MADARA we have managed to quarter on quarter double, and we see it as a substantial future growth engine. Next, it's a very important project that already have been started last year, but then execution started fully first half of this year, is transitioning to Shopify. So for those who might not know, Shopify is a platform or environment in which e-commerce shops are operated and held. So until now, MADARA has been for many years on a platform called Magento, which, yes, is highly adaptable for individual needs, but then it's also less efficient and more resource heavy. So e-commerce, Tatiana will also cover, it's already close to 40% of our revenue share. So moving to Shopify, which is more agile, flexible, efficient, and then also user-friendly environment, it's really pivotal for us entering the new phase and accelerating e-commerce. Next, 2 points are related to strategic decision. Also last year, because we have been gradually building these team capabilities and bringing in external resources in. It's reshaping our retail footprint and reshaping how we think about business to business vertical within MADARA Cosmetics. As you know, business to business is much slower part of the, let's say, ecosystem. For you to understand, to get deals done in Q2, conversations started in November or October last year. So it's a large cycle of getting to the doors of retailers, nailing the negotiation with them, preparing the materials, going through regulatory if needed in some specific areas, aligning on packaging requirements, establishing marketing plans and animation plans in place, planograms, etc., etc. So it takes at least, usually, especially for large retail chains, 6 months this cycle. Nevertheless, I'm very happy to already share that most of these cases happened in end of Q2, but except for Müller, which already happened in Q4 last year. But it has been very intentional decision to move away from fragmented retail presence to more consolidated retail players, which are growing and which are pan-regional with pan-regional representation, such as Truni, which is a #1 beauty retailer in Spain, Nocibé, which is in top 5 beauty retailers in France, Müller, which is actually pan-regional player, key chain for us with the concept stores in Germany, where we started with 5 stores in Q4 last year, and we managed to scale to more than 50 already in Q2. And Müller is one of those players which is playing across the region, so not only Germany, but we already in Q2 entered in Switzerland and Austria. Then Oh My Cream, which is a specialized high-end beauty chain, and more as a shopfluencer in France and UK, and Dosh, which is a Polish parapharmacy chain, which is also unlocking for us the big market of Poland. Another big event this year, and I think it's rooted in the DNA of MADARA, to really walk the talk in terms of how we act and how we behave as a producer, as employer, as a cooperation partner, was to get a B Corp certification. So until now, we have been very closely looking in terms of our certification when it comes to products, so that our formulas are clean, that our ingredients are ethically sourced, and that they're biologically obtained, organically obtained, etc., and that they do not harm neither users nor planet. Then B Corp certification is a big step forward. So this is actually a holistic certification throughout our value chain, making sure that that we walk the talk also with our suppliers, with the environment around us, with our employees, with our collaboration partners, with our consumers, and also making sure that we produce ethical products. So very, very proud of it, and we are the second company in Latvia to obtain B Corp certification. Kalve Coffee was the first one. And last but not least, and I think it's always nice if you get unpaid and positive feedback about what you do. And this has been also a case of MADARA. The previous unpaid feedback we got was a couple of years ago from Gwyneth Paltrow. Then this year in first half, we actually got fantastic reviews and positive mentions without any collaboration from 2 world-level influencers. One is Demi Guy, who is a very active US-based TikTok influencer with more than 3 million followers. And the other one just showing on the picture was mentioned on positive feedback on our SPF product by Emma McKay, which is Golden Globe nominated actress for Barbie movie and also sex education. So these are, let's say, key highlights that really gave us a sense of pride and a sense of joy of entering 2025 and giving confidence of how we move forward. So now on, we will more go into key numbers. As I mentioned, there are also topics where we had, let's say, more tough learning lessons, and Tatiana will cover overall results part, and then we will go more into details how these results were formed overall.
Thank you, Gunta. Hello, dear shareholders. So yes, I will guide you through our key financial results and also different statistics. So let's start with the key numbers. Our revenue in the first half of the year was 11.37 million euro, which is plus 9% in comparison to the same period last year, if we take like-for-like data. If we take numbers as is, then the growth was a bit above 1%, but here I would like to elaborate more why we see it important to look at like-for-like data, which in simple terms is that we compare apples to apples. So basically, just to remind you that last year we had two very important and I would say also one-time transactions. First one was sale of Mossa brand in the first half of the year to Transmedi. And second transaction was divestiture of Cosmetics Nord, which possesses selfname.com business. So we still continue manufacturing products to these brands, and we see growth in volume, but we should acknowledge that the new pricing principles are different if we look at the group level. So here, for revenue to really be comparative, we made two adjustments in 2024 base, where first one was related to Mossa. We recalculated Mossa according to contract manufacturing prices for the months prior the brand sale transaction took place, because we have to understand that even if the same volume is sold, the new prices are lower, so we see that revenue is also lower. But objectively, it's only because of the deal and what were the terms parties agreed on. So first one was Mossa, which we recalculated for the first 4 months of the year. And the second important adjustment was related to self-named or Cosmetics Nord, where markup was excluded from the group consolidated results. And here, just to explain it in simple words again, then in case of self-named, if before MADARA Cosmetics sold 1 unit for €1 to Cosmetics Nord, and later Cosmetics Nord sold this unit to end customer for €5, we reported group result for €5, consolidated group result. And then after the transaction took place, we don't look at these companies as a group, we look at the standalone result. So in this particular example, our standalone result would be this €1. So I hope I made it super clear. So basically, first one was Mossa recalculated, and second one was excluding self-named markup from the base, and then we see how we really increased. So this is regarding revenue. Now, what comes to profitability, and here key ratios what we focus on are EBITDA margin and profit. So our EBITDA was €759,000, which is a decrease of 60% compared to last year. And here again, for the following profitability ratios, we have excluded these one-time deals. So again, just to remind, last year we sold Mossa, revenue was 4 million euros. And related costs were a bit above 100,000. So we have excluded these from the base for numbers to be really comparable with the core business of the company. So getting back to profitability numbers, so yes, our EBITDA was lower than in the same period last year. Our EBITDA margin was 7%, which is also a decrease of 4 percentage points. And pre-tax profit was 284 million, which is around 38% decrease. And here's very important information, and Gunta will elaborate more in depth, but I will just briefly give explanation in some two key numbers, actually. In first half of this year, we took higher risk and tested new pilot projects for us, where we saw higher also gain potential. And the impact of these pilot projects on profitability was around 3 percentage points from net revenue, which was over 300,000 euros, which we invested in these pilot projects. And also what is important to mention here that although I call it investment, these costs were recorded as period expenses, so they had an immediate impact on profitability. But Gunta will explain more in detail on pilot projects, and I will tell you more about geographies. So how we did in terms of revenue split by big regions. So actually there are no fundamental changes. Latvia is still the biggest market for MADARA, and the majority of our sales are still generated in the European Union. Maybe what you see on pie charts that the share of Latvia has increased by 9 percentage points. So this is also related to divestiture of Cosmetics Nord or selfname.com. And here I hope that my example was super clear, but if prior to that we looked at group results and sales were split by regions where they happened, then now as self-named is not in our group, all sales to self-named are reported under sales to Latvia, where the company is still established. So this is the biggest shift. But if we look at MADARA brand specifically, then what we see? And we see that the 3 largest markets for MADARA are growing. If we look at export markets, then Germany and France are top 2. So Germany had a wonderful double-digit 24% revenue growth. In France, we had 7% revenue growth, and then in Latvia, which is a key market, the biggest market here, our growth was 13%. This is for the MADARA brand. And of course, life is life, and not everything is happening as you expect. So there were some markets, including Finland, which is also an important, very big market, which experienced stagnation. So Finland is one. I can also mention the Netherlands or Belgium, where we saw that sales are declining. So overall, it impacted our revenue growth. But I am really proud that in key markets, which we have defined as key, we were able to achieve yes, double-digit growth. Then if we look at product categories, so here we are still paying most of our attention on innovation in face care products, in anti-aging products and makeup. So these are our largest categories, and we don't expect any changes in the near future, and this category split. And here we did quite a lot of innovative work, and in the first half of the year we launched 17 new products, and already during this period they generated 800,000 euros in turnover. And one of the innovations, SPF 50 sunscreen stick, actually became the best-selling product in Spain in the second quarter of this year, which we are really proud of. And just to give you more information on what are the launches of the first half of the year, then we launched H Pro line, which has 5 products. Then we launched already product mentioned by me, this SPF sunscreen stick. Then we had 5 shades of H2O tinting serum. And then we continued to innovate in pressed powder segment, where we launched mineral bronzer. And we also entered completely new product category for us, which is pencils. So we launched 2 eye pencils and 2 brow pencils. And also for these new categories, we are already receiving very good market feedback. And last slide from my side regarding the channel split. And here, as Gunta already mentioned, direct e-commerce is making quite a big part of our revenue, and it is almost 40%, but not yet. Nonetheless, what we see is growth, and our direct e-commerce share increased by 3 percentage points in comparison to same period last year. And from now on, we will report also on Amazon and TikTok, which are channels also directly operated by our own teams. So direct e-commerce in total increased by 3 percentage points. If we look at our MADARA e-store, then here also 2 important statistics. So first one is that we continued investing money in attracting new users and building brand awareness. So what we see is that our new customer share was quite stable, and actually with a 2 percentage point increase. So this is a very important segment, and we will continue focusing on building brand awareness and attracting new customers. And also, e-store in total increased by 7% in revenue. And here again, if we look at specific countries, Germany reported over 20% increase. And then if you look at report, we also reported more detailed statistics on some markets. And here again, some markets operated with not growth, but they decreased. As a result, our total is 7%. But if we look at our focus countries, then growth is much higher. And then another segment which is important and where we have established dedicated team is Amazon. And for Amazon, we saw and we achieved over 100% turnover growth, which we are also really proud about. And last information here from my side is that we were very happy and also surprised on how our experiments resulted in Spain, because what we achieved in Spain was, in my opinion, truly amazing results. We achieved over 300% revenue growth, as a result of which Spain joined the top 5 largest MADARA e-stores. So we will continue working with this market. And now I give floor to Gunta, who will guide you through our key pillars for the growth.
Yeah, to continue maybe more and explaining more why so many experiments and why so many pilot projects, and which has worked and which we, let's call them, take as a learning lessons for the future. But I think nonetheless, all of this is giving us a confidence that we are moving the right direction. And this has been a really worthwhile investment towards future growth, but then also realizing where we have to build on in terms of efficiencies and improving EBITDA. So first of all, when we come through strategic lens, how we have refocused, I would say, over the last already year and a half, is that we have established two very centric pillars through which we see growth will come. So first of all, MADARA is e-commerce centric brand, and this is how we see it. And beyond that, we see MADARA Cosmetics is e-commerce centric company. So I will explain it why I talk about brand and why I talk about company. And then the second, let's say, this big pillar is having omni-channel strategy, then both e-commerce joining physical retail, which again, yes, there are purely e-commerce brands that are building without physical retail, but we believe in terms of building long-lasting brand awareness, brand loyalty, but then also product experience. Physical retail is very, very, very crucial. So that's why we have also reshaped how we approach this retail footprint. So coming on the first pillar on this e-commerce centric growth. So how do we view it and why do we talk about new user acquisition so much? And it stems from one single data point. There is a much more underneath that, but just to give an understanding and logic. MADARA has way above market average or industry average retention rate. What is retention rate? So this is the percentage, how many of first-time users or first-time shoppers come back with the second purchase. So if in average on the industry, every fourth customer that has tried the brand comes back to you, then in MADARA we see it average is by 6% points higher. In some of the key markets, we see this number actually approaching 40%. So what does it mean? It gives us a very high confidence that we have higher than average loyalty base for our customers, shoppers. But it also helps us understand how we build these metrics and models of how much we are willing to pay for, and we call it user acquisition, or what's the cost of acquisition of a new user, so that we know that 1/3 of them on average is going to come back on the second purchase. And this is very important on setting how much we can invest to get this one user in, knowing that the payback is coming around 9 months period, because the second purchase, it depends, but it's from the window of 2 to 5 months. So how we look at it then from this lens. So new user acquisition, which means it's crucial for us to get repeated purchases, because we know the repeated purchases are going to come. So first of all, we have markets that we have identified, and we call them as win where we are markets. And those are these key strategic markets where we already have last year unlocked the model and unlocked the, which is very important, economics of this. So we know that this new user acquisition is profitable for us. So this is very, very important, and profitable within financial year period, because even though consumers don't care about financial reported periods, we do. So this is also important how we land it into January to December time span. So where it gives me a confidence and really a very positive expectations towards also upcoming quarters. So we have seen quarter over quarter already from last year, then Q1 and then Q2 repeatedly, that we have high double-digit growth in those markets, those, let's say, core or existing markets in new user acquisition. And here on those core markets that we have defined, which is Latvia, Denmark, Germany, Estonia, and France, we have experienced in e-commerce more than around 17% revenue growth, and we have increased the base of new users by around 6,000 new shoppers that are going to do repeated purchases in the upcoming periods. So this is first layer. The second layer is where the testing starts, or these pilot projects start. So there are uncharted territories for us. So there are relatively big markets which we would like to enter, but we don't know what's the economic of that market. So for first half of the year, we have identified two big markets, which one of them is Spain, and the second one was US, the United States. where we said, okay, we set some investment aside and we invest into new user acquisition and see how these metrics line up. So how much we have to invest and how many of them come back with the second, third purchase, and where do we start making profits. So here we had a win, and I call it a learning lesson. So already, as Tatiana mentioned, we had fantastic results in Spain, and we will continue still investing in Spain in the upcoming quarters. And I expect already 2026, we will speak about Spain, seeing this positive spillover on other channels in Spain. For retail, we will see Spain appearing already as a core market for us. The second, let's say, bigger test project was in the United States, where we did the same, let's say, logic. The numbers and math is different for each of the markets. And here we saw that in the 6 months period where we started new user acquisition, we didn't get to a healthy metric. So what does it mean? That in short term, we saw that we can't build economics that is bringing us in 6 months period in the profitable, let's say, side of the economics. So we paused US and we paused it until the time when we launched Shopify, and I will come back to it in a bit later phase why Shopify is so important. But this has been one of those pilot projects where we tested. We had the learning lesson, we paused it already in June, which means we will not kind of experience this zero profit or break-even dilutive impact. The next level, even further talking about new user acquisition, is one is yes through our own e-commerce, madaracosmetics.com. But then, like I mentioned, it's very important for us to uncover these new verticals, new growth verticals and channels where we are not present. And we call them other direct, because like Tatiana mentioned, for TikTok and Amazon, we have our direct team, and these are our direct channels. It's just third-party platforms. But then we have third-party player channels like Zalando, Flaconi, Boost, to mention others. And these are also super crucial because how shoppers work or how the mindset works, at the end of the day, then consumer, they don't care where they bought the product. It's just that they bought it and they had a good experience with it. So what we have been also investing and testing on the first half of the year was opening TikTok shop. So I already said that we are very proud that we doubled. Of course, it's absolutely still small, but we saw positive traction. So here we gain the confidence that we are not at break-even yet. So still we are not earning money on TikTok, but we see with continuing aggressively scaling the channel, we will reach to the fact that we absorb fixed costs enough that we start earning with the channel in the upcoming quarters, and that's the expectation towards the end of the year. And then also talking about third-party channels, here we have close cooperation with those platforms, and then, for example, working with such third-party add-ons as Criteo, we are managing these, for example, Flaconi ad spend campaigns where we again gain fantastic traction on those third-party channels where again we get new users. Why I have been returning to Shopify so often? So Shopify is where the efficiency comes in. So if up till now we have been working with Magento, which is yes, highly customizable but less flexible platform, then Shopify over the last, I will say, already 5 years has developed into the mega house or mega power for brands to operate their e-com stores from. And this is for maybe you to understand, it is a bit like a spinal surgery for the company. E-commerce is a big part of our business. So whenever we transition from one operating system to another, it is a massive work behind. So we have been preparing for this already from Q4 last year. So execution started happening this year with first some tests already happening in Q3 and full go live in Q4. Why we are doing it? Overall, there are two big reasons. One is we will improve efficiency, so in terms of costs and resources that are attributed. And second, which is also super important, is user experience, which is much better on Shopify, much more customizable, both on desktop and mobile devices. And this is related to MADARA. And why I mentioned MADARA and then MADARA Cosmetics as a company is that it has been also in the DNA of company to, let's say, test and do different spin-offs outside MADARA brand. And this is something that conceptually we will seek into as a potential to get new users, again, coming back to the new users. And there are certain niches and certain segments where we understand we can't tap in with MADARA brand. So this was the sole reason of creating Brand Lab Cosmetics with e-com-centric model of testing these niche concepts. And if just to give an example, what niche means, it means, for example, products for age spots for women, for example, on hands or on their décolleté, or this is menopausal products for female entering their pre or postmenopausal life experiences. So we tested more than 10 such different concepts, mostly in United States and United Kingdom, mostly based on Shopify and mostly through Meta platform advertisements. So altogether, we invested in this more than around 150,000 euros. And this is where we didn't see, let's say, in economic terms, giving us a short-term payback immediately. Definitely, we acknowledge it has been draining in terms of profitability. So we have paused at the moment these concepts. However, we have gained quite substantial learning lessons on understanding more these niche target audiences and niche products, where we also take a learning curve once developing MADARA products, and I will come back to it a bit later. And it also gave the team higher, let's say, knowledge and understanding on Shopify platform while developing one for MADARA. So what works, what doesn't work, what type of interfaces work better, what type of pricing models work better. So there was a lot of synergies also developing Shopify store for MADARA. So this is on the e-com-centric growth where we, let's say, invested, succeeded, reaching break-evens or pausing. The other important pillar where we reshaped our strategy is physical retail. And here we have really relooked at how we approach retail and physical retail. And if until now, MADARA's growth strategy has been really going through bottom-up, small, fragmented niche and concept stores, we see this is no longer how the industry moves. And also with our brand, we see we are setting up ourselves as a challengers to conventional beauty. But where conventional beauty stands, they don't stand as small niche, let's say specific boutiques, but they're standing on the main street retailer shelves. So we have to be there where the conversation is happening. So already last year we started, and we will finish this year, is reshaping our approach from country-based to regional teams. This also foresees team resource revision and reallocation with the go live in Q4. What does it in more detail entail? That we will also automate our client tiers. So we have been working with more than already it's close to 400 B2B customers. This is already quite a lot. So we also have to start tiering them. So we will tier the smallest customers to full automated customer service model. So this means we also have revised what type of key account competencies we need within the company. And we need such competencies that can focus on medium and large customers. No longer on these niche, small B2B acquisitions. And this is where I'm very, very happy that, like I mentioned, the cycle is much longer than on B2B. It started already in last year. So we had first success cases with Müller, Bruni, Nosebe, All My Cream Dutch, and more coming. And I'm excited to wait for Q3 report to bring more news on the table, because retail works in the roughly 6-month cycle. So first, the negotiation cycle is happening usually October, November, with listing windows in March till June, and then the second is literally starting now. And last but not least, we have also refocused our team and brought in external competence inside end of last year. to help us unlock new geographies. So outside European Union, and this is where we already stated in our press release, but then also in financial report that unfortunately I can't spill the news now, but we have been rigorously working in the background on really entering and unlocking new territory for MADARA. So this is on how we look at the growth and why it gives us the confidence of moving forward, that we are working on the right growth pillars that will bring us positive results in the upcoming periods. So if you look further of what's to be expected from what I just presented in the second half of the year, so for myself and Tatiana and then whole management team, there are two tasks at the hand. So this is minimum of 10% growth to be expected on full year basis, like for like, still because the first half is impacting the results because of Moss and Southland. So it's a minimum of 10% growth, and it's a very high and urgency agenda on coming back to sustainable profitability, which is double-digit EBITDA margin. So this is what we are looking forward, and this is what is expected, first of all, from the team, but then also as a commitment towards our investor community that we need to come back to sustainable double-digit EBITDA margin in the H2. But yeah, so these are 2 points, but then maybe explaining how we get there in more detail. So if you look at these strategic growth pillars, so first of all, on e-com side, so we will do what we have been doing successfully on those on those focus markets, so that's not changing. Second layer is still scaling new markets, so we will more even aggressively scale Spain, and then adding new market on the map, which is Italy. The next lever is we have been working closely with TikTok growth team directly, so there's direct counterpart on TikTok side, UK, where our ambition is to actually triple the channel, so we come to break-even point by end of Q4. So this is very, very crucial, which then will give us the confidence of opening new markets for TikTok, and then further scaling Amazon. So these are two really important direct channels where we see the more we grow, the higher is the fixed cost absorption for us, and the more profitable these channels become. Then crucial for all of the, let's say the first 2 points, is that we launch Shopify storefronts across all stores. So we have, I don't want to lie, more than 10 stores, storefronts, so in different markets. So we have to launch all of those, including B2B portal, which is serving those small customers in an automated way. And then what we are pausing for H2, so which gives us a breathing space in terms of profitability, is pausing those test pilot projects in USA and Brand Lab Cosmetics. If we talk about business to business, then we will finalize this regional team setup implementation by Q4. So there are changes happening across how we look at the competencies within the team and resources that we have. Primarily, we expect to expand the presence, so it means entering in more shops with those partners that I already mentioned. Of course, adding new ones on top, but it's very, very crucial that we don't stop the growth journey with Muller, with Druni, etc. So it's very important that we keep investing in those partners, that we expand the doors, especially like I mentioned, that many of them are pan-regional. And then so this will be really then starting operating in new geographies, where again, can't say much at the moment, but then we'll deliver the news in a couple of months. Going further, how we get to, let's say, positive momentum in H2 is then also through product lens, further establishing MADARA as strong challenger in functional skincare. And here already we have launched, and it's available, it's kojic alternative. So already we have winning formulas of retinol alternative, niacinamide alternative, now kojic alternative is joining. What is very important, we will continue developing our makeup, so further investing into pressed powder innovations. So we already again have launched on our web store, so it's not a secret, it's highlighter. And then not spilling any news at the moment because it's not public yet, but then also further innovation on foundations. And last but not least, like I mentioned, taking these learning lessons throughout the first half of the year, we have been working on limited editions, which means testing different concepts of products, and those are coming in Q4. And then last but definitely not least, it's coming back to sustainable double-digit EBITDA margin in H2. So we see three major pillars here. So first of all is we have been already starting in May, June, revising organizational setup and efficiency. So it's mostly related to how we organize sales with this regional setup, like I mentioned, but then also our operations team in terms of planning, in terms of procurement and production, etc. Second pillar is revising resource allocation that is beyond core business. So we have taken already managerial decisions where we pause profitability 0 point diluting pilot projects, like those I mentioned, like for example, specific country pilot projects or then brand lab cosmetics projects, which gives us quite a large breathing space in terms of EBITDA. And then it should go without saying, still we put it on the table that also we are doing overall cost revision across the company throughout all P&L lines, revising needed cost savings, so we reach the double-digit EBITDA that I mentioned. So all in that, this is the last slide of the presentation, and looking forward myself towards H2 and then also 2026. I think it's setting really profound and exciting base both for the team, but then I also hope for investors looking forward. And we are ready now to answer the questions.
Indeed, we're now opening the floor for questions. Please submit them in writing through the Q&A window or raise your hand and be unmuted. We will start with the questions submitted prior to the call, then we'll prioritize the audio questions, and finally we'll continue with those submitted in writing. Our first question: are there any products or lines planned to be discontinued from production or launched in the near future?
Yeah, we'll take this question. So product portfolio revision is something that is happening on an ongoing basis, and every year around April we go quite thoroughly through all portfolio of our products and how we look at our portfolio. So we look at it from mostly three angles. So first of all, it's growth. So whether product has growth, what's the absolute contribution of that product, and third is what's the profitability of the product in terms of product net margin. And then in some cases we see there's some market specifics to the product, but that is less maybe important. And then each year we take a decision which products to discontinue. So just to give a glimpse, and discontinued, it not necessarily means we stop selling that product in the upcoming months, because sometimes we take those decisions with a quite far-sighted look, because we know we have X amount of stock, X amount of ingredients, or X amount of finished product in the warehouse. So sometimes these decisions come, let's say, year one, but the execution happens in year two. So just to understand the scope and implications of it, so in 2025, we already have discontinued around 17 products, including those of a couple of sets, vitamin facial oil and others. I will not maybe go into detail. And then we have already announced to the partners this year, so it's not confidential news, that we are gonna discontinue another 9, but the sales still continue because there's, like I mentioned, some stock related topics where, of course, it's much better to sell the product than to write off this packaging or finished product. So altogether, 2025, we are removing 26 products from our portfolio. And then, of course, it comes together with what we are bringing as new on plate. And like I mentioned, or Tatiana mentioned, in the first half of the year, it has been actually very, very active. So we launched 17 new products. There are also very exciting news, the ones that are out there already on Project Alternative or Highlighter, but more to come in semester 2. So it's an ongoing process.
Thank you. You have recently announced 120 new shops in Europe. Have you done it yourself or franchise?
So when we talk about doors, so in English it's called doors, we enter doors. What does it mean? It means third party. So MADARA's strategy is not opening our own shops. Yes, we do 4 retail stores in Riga, but that's it. So this is only where we have our own physical retail. So when it comes to expanding physical retail presence, it's only through third parties or our B2B customers, business to business customers. So those 120 new locations is coming from the partners I mentioned and others.
Thank you. I don't see any hands raised. Let's wait a moment to see if any new questions come in through Q&A, perhaps. Okay, it seems the information provided has been very explicit. As no further questions have come in, we'll now be concluding the Q&A session. Participants, thank you for joining us today. We'll be looking forward to seeing you in our next events.
Thank you and goodbye.
Thank you. Goodbye.